Bear with me. Okay, cool. So the first thing I'm going to go over, guys, is step by step what you need to do as someone that's literally brand new, that's starting to put everything they learn onto the academy onto TradingView, right? So let me just explain the difference between MetaTrader and TradingView. So MetaTrader is the platform that you're going to be using to actually trade off of. So that's the app on your phone. You can download it on your computer as well. But MetaTrader is the platform that you're going to be using to trade off of. What I've got up here is TradingView. The difference is on that TradingView, it's just a lot clearer to mark up your charts on there. It's got more indicators, it's got more tools, it's completely free. So when you guys go to mark up your charts, you can use MetaTrader or TradingView, but my personal preference is TradingView. But the only difference is you can't actually place a trade on TradingView. It's purely for analysis, right? So when you do your analysis on TradingView and you want to go and place a trade, you have to then go onto your MetaTrader app and then place the trade on MetaTrader. So you can't physically place it on TradingView, right? So TradingView, the good thing is when you sign up to an account and everything, you're then going to be able to save your analysis, because every time you log in, it's going to have everything there. So you don't have to keep redoing it all the time. It's going to just be saved. So every day when you open it up, all your analysis will still be there, right? So the things I'm going to go over right now is what to do when you load up your TradingView and everything, what you're going to be doing, what you're going to be looking for first to put onto your charts, right? I'm going to go through a checklist with you guys. I always keep my checklist right next to me whenever I trade, just so that my mindset is in the right frame. I'm just going to go over what I do before I place my trade, stuff like that, so you guys can kind of get an insight into someone who's been trading for like a year and a half now, like my routine sort of thing, what I do. So the first thing I'll do, it sounds crazy, but the first thing I'll do before I even open up the charts, before I even go to place a trade, the first thing I will do is I will listen to like relaxing music / sounds, just to get yourself in the zone. Because if you haven't read, there's a book, it's called Trading in the Zone, right? You can listen to the audio book as well on YouTube. It's called Trading in the Zone. It's by Mark Douglas, sorry. And he basically goes over how to get yourself into that zone and that mindset when you're doing trading. And that's one of the most important things, especially as a beginner. If you can understand the concept of your mindset and your psychology when you're trading, you're going to make it a lot easier for yourself than going in and becoming a professional trader, as opposed to going in and your mindset is all over the place and you're trading because you need money and that sort of thing. You need to get yourself in a right mind frame before you even touch the charts, before you even go onto the charts and place any sort of trades. So my advice to you is read Trading in the Zone or listen to the audio book on YouTube. It's free. And then you'll get yourself into this kind of state of mind where you realize what you need to be doing as a trader, what's correct, what's wrong, that sort of thing. So yeah, that's my number one recommendation. Number two, when you've done that and you're in the zone and you're in your right mindset, right? What I want you guys to do is first of all, go onto TradingView and I want you to pick out some currencies. So I've got all my saved currencies on the side, right? So you can see there's quite a few of them here. And the ones that I highlight are the ones that I actually trade. You know what I mean? Like, if you don't like it, get out of the chat, mate. Anyway, so the ones that I highlight are the ones that I'm actually looking at and the ones I'm waiting for a move to happen, right? The other ones, there's nothing really going on, so I'm kind of just leaving it. So what I want you guys to do is pick 5 pairs, right? It can be any 5 pairs. I wouldn't recommend gold because it kind of is crazy. So I would recommend, personally, if you guys are writing notes, these are the 5 pairs I would recommend you to start with. Euro USD, USD JPY, CAD CHF, GBP JPY, and Euro GBP. They're the 5 pairs I would recommend to you. I'm going to write them all down afterwards as well and send them into the chats so you've got them there. But I would recommend you start with those 5 and then build on, maybe find out what ones you do like, what ones you might not like. As a trader, you're always going to have like certain pairs that you're good at, certain pairs that you're maybe not so good at. So I'm not too good at gold, but I'm good at Euro NZD, for example. So it's kind of like personal preference, and you'll find it out. The more time you spend on the screen, the more time you spend trading, the more you're going to understand what you're good at, right? But those are the 5 I recommend you to start with first. So what you're going to do when you open up your chart, what you're going to do is you're going to see what the market is doing overall. So you're going to go into a daily chart. What I'm going to teach you guys right now is called top-down analysis. It means going from a higher time frame and gradually getting into a smaller time frame to figure out what the market is going to do at the price it's at, right? So top-down analysis means that you're going from day 1, then you're going to go to 4 hours, then you're going to go to 1 hour to see what the market's doing. So right now, just looking at Euro NZD, right? If we're on a day chart, we can see that right now, over here is a high point. Over here, oh shit. Over here is a low point. And then price is right here where this red line is, right? So this is where price is at right now. So we want to know what price is going to do in the next coming days so that we can get in and we can either buy it or sell it and make profit, right? So the first thing we want to do is identify the way the market is moving. So right now, just by looking at it, you can see that it's clearly going up, right? So we can see right now there's a lot of momentum going upwards. It's going in this direction. So what are we going to be doing? We're going to be looking for buying opportunities. The trend is your friend. I'm sure you've all listened to this in the Daisy Duncan's Academy. The trend is your friend. I am always a student, right? So the trend is your friend. If you can see that the market is clearly moving upwards, you're not going to be looking to sell it. You're going to be looking to buy it, right? So number one thing, what you do when you've got your daily chart up, you're going to put in some daily support and resistance lines, right? So just wherever you can see it, I can see one like here. I can see you got the top and the bottom one, and then maybe we've got like one around here, right? So personally, don't put too many daily support and resistances in. Don't put too many support and resistance. You just want to keep it simple. You want to keep it so that you can see what price is actually doing. I've put in, 4 there, right? You can put in more if you see it, but it's not necessary. Then after you've done that, you want to move on to the 4-hour time frame, right? So now on the 4-hour time frame, you can see that a lot more support and resistance has actually appeared, right? So then what you can do is you can put in some more support and resistance, but just change the color so you know what one's daily, what one's 4-hour, and what one is 1 hour, right? So I would put one here, and let's change it to yellow, apparently. We've got one like here as well, but that's not too relevant because we want to stay where price is. And then maybe one around here, right? So then you've got 4-hour ones and your daily ones together. See how this purple one, the daily one, see how price reacted a lot more violently, like it rejected it a lot more than maybe the 4-hour ones, because the daily is always going to be stronger than the 4-hour or the 1 hour, just because the time frame, the bigger the time frame, the stronger the support and resistance, right? It's like facts, just remember that. Then you go on to the 1 hour once you've done that and put in any more that you can see. So we could put one here. And what I would recommend for you guys is to change your lines into zones. The reason I say this, because you're giving price room to breathe. So let's say, for example, we make this into a zone like this. If you watch Chris Derrick, you'll know why I'm making it into a zone. If you don't watch Chris Derrick, you're playing yourself. Watch Chris Derrick. IMO TV. Right, so after you change, I'm not going to change all of them, but after you change your support and resistance into zone, you're then giving price a little bit of room to breathe. So your zone only has to be like, 2-3 pips big, but you're giving price room to breathe so that it can actually, you can give it space to maybe move up, fake out, and then make the move that it's going to actually do, right? So right now, looking at Euro NZD, we're looking for buying opportunities. Why? Because we're in an uptrend, right? So right now, just looking at it, we can see that it's made this crazy move downwards, then it's consolidated, then it's come back up. So right now, we're probably waiting for a move for it to go down, and then we're going to be looking for that buy opportunity, right? Because what goes up must come down. So realistically, if you know you've got your support and resistance and that price is going to react off support and resistance zones, what are we going to wait for? We're going to wait for price to come down because it looks like it's going to bounce off, right? So we're going to wait for the price to come down to the next support and resistance zone, and then we're going to look for our buy move upwards. That's exactly what we're going to do. So at this price here, we want to wait for our buy move to happen. It doesn't mean when it hits this price, it's definitely going to shoot up. That's what confirmations are for. So when it hits this price, we're going to wait for confirmation to see if it's then going to go up, right? Confirmations are different for everyone. This is where your own strategy will come into play. Once you've got your trend lines in place, once you've got your support and resistance in place, everyone's support and resistance and trend lines will be slightly different, but generally the same. The differences with people's strategies is that people use different confirmations to decide if they're going to enter a trade or not. So my confirmations are candlestick patterns. I don't use any indicators at all, and I use daily confirmations. That's literally all I use to enter a trade. But you look at some other people, let's say, for example, Mark is a big supporter of Fibonacci. So you could choose that if you're going to enter a trade, the fib needs to be on a 61.8. It really depends. And the only way you're going to find that out is by testing things out. So if you're thinking, I don't know what to use as a confirmation, you need to test out some indicators. You need to test out Fibonacci. You need to test out maybe harmonic scanner. You could use web analyzer. You could use so many other things, candlestick confirmations. It's really down to you and just testing it out. Because I can sit here and tell you how I trade, but it won't work for you because it's not your style, right? So no, you wouldn't go for the sell because it's not definite that it's going to go down. If you're in an uptrend, right, you don't look for sells. The trend is your friend. You do not look for sells. Even if it looks like the market is going to go down, it's not worth it, because what the market can do, because it's in an uptrend, it could say, do you know what? I don't even want to go down. I just want to continue going up. Then you would have sold it, and then you would be, you're not going to be in a good position. So don't do that to yourself. Just wait for the perfect entry. Big facts right now, guys. If you miss a trade, tomorrow there will be another setup. Don't be that trader that's like, oh my God, I'm going to miss out on a trade. I missed 50 pips. I missed 100 pips. Like, guys, trading is for life. Like, the market is not going anywhere. Fiat currencies are not going to die out. Crypto is coming. Like, trust me, the charts are going to be around for a long time. So if you miss a move because you were sleeping, or if you miss a move because you wasn't looking at the charts, it's not the end of the world. Tomorrow there'll be another setup. So please don't force trades or like try and get into a trade late and things like that. I've already gone over the difference. I've literally just gone over the whole thing. But yeah, the blue line. So the purple line is daily, and these other lines are 4 hour and 1 hour. That's the difference between all of them. So you just got to take into account that the daily ones are going to be stronger than the 4 hour or the 1 hour ones, right? That's the main thing, the difference between them. So yeah, as a beginner, what I recommend you do is get a checklist together. So the first thing you want to do is make sure your demo account's set up. If you don't know how to set it up, you need to ask the person that brought you in, or ask someone in your team. It's really easy. Make sure you use IC Markets. Do not use Meta Quotes or whatever the standard thing is. Don't use that. Make sure you've got a broker on your demo account so it's as real as possible. That's the first thing you want to do. Second thing you want to do is making a TradingView account. Make sure you've got it and you've got it to log in so that you can always go back and look at it. And next thing you want to do, make a checklist and have it by you every time you trade. So right now, right, my checklist is literally right next to me. I always have it here next to my computer. All you need to do is get a sheet of paper, right, checklist, and then you need to write out the steps you need to take before you enter a trade, right? So for example, first thing on mine, it says, we go over it, right? It says trend. First thing I do is identify the trend. Make sure I'm not getting into sells in a buying market, not getting into buys in a selling market. That's the main thing, because it just doesn't work, right? So just don't do it. Just identify the trend and go with the trend. Know what you're looking for, if you're looking for buy opportunities or if you're looking for selling opportunities, right? And that's the first thing. Second thing is your support and resistance, top-down analysis. Day 1, 4 hour, then 1 hour. That's what you're looking for. So you're looking for these areas where the price seems to bounce off or reject, right? As you can see, literally just looking at the chart, you can see that on these areas that we've marked out, price literally rejects off them consistently. Then it breaks through. This could be because of news. It could be because there was something to do with the economy. It could be to do with so many factors, but usually a breakthrough will be because of news or economic something, right? So that's when you see breakouts, don't be like confused. This is the whole purpose of making sure you have a confirmation, because if you was to sell at this price when it was breaking out, you would have lost money, right? So then at that price, at your zones, you're waiting for confirmations. Confirmations can be anything. Like I said, candlestick patterns, price action, indicators like stochastic, RSI, Bollinger Bands. It's really down to you what you're going to use. Moving averages. Only way to know, again, test them out, like back test. You guys don't understand how much information you've got. Like literally, if you scroll back onto the charts, right, this is what back testing is. So if you ever see anyone in the chats talking about back testing, this is what we're doing. Back testing is when you go all the way back to the charts and you test out your strategy on the charts before to see if it would have done what you want it to do, right? That's what back testing is. You've got all the information of what a trade will do, like literally years of information backed up. So guys, use it. Like back test your strategy. If you've got your strategy and your checklist in play, before you do it on a demo, before you do it on live, you want to go back and back test it and see if it would have worked out on price before, and if it would have gone your way, right? So I would say like test it around 50 to 100 times to see if it would have done what you want to do. If it's a majority of the time it's going your way, then you're good to forward test it. When I say forward test it, I mean test it on a demo for like a solid month, solid week, solid month. Like make sure that your strategy is good. You're using risk management. Another really key factor, make sure you're using risk management. And then, yeah, once that's all confirmed, then you start a live account. Like I've said multiple times, like if you want to start a live account and start making money straight away, don't rely on your own strategy. You use the tools. The only way that you can come in and make money within the first, 2 weeks, 3 weeks, 4 weeks, month, the only way you can do that is by using the tools. There's no other way to actually, come in and make crazy money off your own strategy. It just doesn't work because it takes time, and it's just something you go through. As a trader, you're never gonna learn in a month, okay, that's my strategy, I'm making crazy money now. So if you do want to make money, just even to pay for your package or things like that, use the tools to help you. Like don't rely on your own strategy because it takes time, and it's something you just have to keep going through. So right now, what I want you guys to do is when you've got your checklist ready, send it to your mentor so they can recheck it and they can see, okay, this person's got a checklist, they know what they're waiting for. If you don't know what your confirmations are, I recommend you go back test, try out things like moving averages, stochastic, all the basic indicators. You've got so many indicators on TradingView, it's a joke. Like right now, if you just look, we can just scroll down forever. Like there's so many indicators for you guys to use. So I would recommend you test them out, see what works for you, see what doesn't work for you, and then go based on what you prefer. So for me, I don't like indicators. I just use price action. I like looking at the candlesticks and seeing what they're going to tell me, things like that. Things like Elliott waves, harmonic patterns, things like that. That's the sort of thing I like to trade with. But certain people will use crazy indicators, and that's what they're good at, and that's what gets them money. So it's all based mainly on your mindset. So like I said, retrading in the zone or listen to the audio book. But after that, it's based on just sticking with your strategy and being consistent with it. If it doesn't work 2 times, it doesn't matter. You just keep going at it because the ratio will appear. Once you've done it, 50 times, you're going to see if that strategy works or not. If you do it 2 times and you lose and then you stop, you will never know if that strategy was actually really good and you've just given up because it didn't work 2 times. So give it some time, be patient with it and be consistent with it. That's the main thing. And it's like send your charts to your mentor because they'll know if you're doing something correct or if you're doing something wrong. Like don't be afraid to ask for help or send pictures into your group chat, that sort of thing. It's really, really important. But yeah, that's the main thing that I wanted to go over, guys. Is there any questions anyone has for like basic chart setups and like how to go about setting up your chart, or anything to do with like beginner stuff? If you do have any questions, please put it in the chat and I will go through it for you. Or if not, okay, cool. If not, I will leave it there. Oh, okay, we've got one. Oh, we've got loads. Okay. How do you choose what pairs to focus on? Like I said, to be honest, it's just based on personal preference. So you've just got to try out pairs and see what you're good at and what you're not good at. So from my experience, I'm not good at gold because I just don't have no idea what it's doing. Like I literally just can't analyze it. But you've got someone like Ishmael P2000, he's sick at gold and he knows exactly what it's doing. So in terms of choosing what pairs to focus on, it's literally just about personal preference and what you're better at. And if you like volatile markets, or if you like maybe more laid back markets, if you're trading in the morning or if you're trading in the evening, like there's so many factors, and it's more about just figuring out what works for you by just testing it out. Like everything is there for you guys, just make sure you're testing it and you're using things rather than looking for like this golden strategy or like looking for this pair is the best, trade it. Just test everything out, and then you'll be able to go over everything. How do you scalp? No, I don't scalp. I'll either look for like 50 pip movements or I'll look for like big movements. So not swing trading, but I'll look for like bigger movements. I used to try and catch like 20 pips and out, but I'm just not really good at it. So I'm more like go for longer term trades now, like 50 to 100 pips sort of thing. How do you read trend lines? Okay, trend lines are really important, guys. Trend lines, let's get a really good trend in market so you guys can see. Okay, cool. So trend lines, is just when you figure out what way the market is going, right? What I would recommend you do is you zoom out a lot so you can actually see where the market exactly is like, you know, bouncing off. When you can see that the market is bouncing off of certain areas, you can actually just literally draw a line connecting the dots, and you'll see that like every time it hits that point, that it's gonna bounce, price is literally gonna bounce off it. So that's literally how you would draw a trend line. You just connect the dots where you can see it's bounced off twice, then okay, that's confirmation for a trend line. You then continue drawing that line downwards, and you'll find that it will keep bouncing off. Again, it could break through, so you're waiting for confirmation. Like, don't just enter a trade based on, oh, it's hit the trend line and now it's going to drop, because we all know that sometimes it breaks through and then, you know, it comes back down and it stops you out and you're like, oh my God, why didn't I just wait, and this sort of stuff. So just be patient with it. Wait for that proper confirmation that it is going to then, you know, bounce off the trend line, whether it's an uptrend or a downtrend. You're waiting for confirmation, main thing. Don't just enter a trade based on was hit the trend line, so it has to go down now, right? Because the market makers are not that nice. The banks are not like, you know what, yep, we're going to make it so easy for everyone else. Because a lot of people would have got stopped out, like when we faked out here and that sort of thing. So again, just make sure you're waiting for confirmations. You can create a channel. So you can put a trend line at the bottom as well. It's not necessary. So like if it's a downtrend, you're only interested in where it's going to bounce off of at the top. You're not really interested at the bottom. If it's an uptrend, you're only interested again at the bottom. You're not really interested about the top, because in a downtrend, we're only looking for sales. So we're not really interested where it's going to bounce off at the bottom, right? We're more interested at, okay, where is it going to then decline and fall? And trend lines are like a good place of where the market will go down. Just be wary, because sometimes it fakes out and sometimes it breaks out. So just be wary, and again, wait for confirmations. I don't scalp. No. How can we get all the recording? I'll send it into the chats. How do I mark my stop loss and take profit? So stop loss and take profit is dependent on how you trade and your trading style, right? So let's say, for example, you're a scalper and you're only going for 20 pips. Your risk to reward shouldn't be 1-to-1. So if you're risking 20 pips to make 20 pips, that is crap. Do not take the trade. So if you're a scalper and you're looking to get 20 pips, your stop loss should be like 5 pips, 10 pips max. Like your risk to reward should always be 1-to-2. So if you're someone that's a swing trader and you're looking for 100 pips, your stop loss should be like max 30-40 pips. Like, and even that's a bit big. Like, you should aim to get your trades pinpoint entry, like wick entries. Once you understand that, then your risk to reward is going to be crazy good. But if you're risking more than your reward is, or if your risk to reward is 1-to-1, like your stop loss is bigger than your take profit, or they're the same, and it's not worth taking the trade. Like, you want your risk to be so much smaller than your reward. Like, your reward should be so much bigger. So your stop loss and take profit will depend on you as a trader. If you're a scalper, if you're a swing trader, if you're a day trader, like there's so many different variations, and it really depends on all of that. So depending on what you are will depend on how big your stop loss should really be. And again, it's just based on risk to reward. And your lot sizes, please use the lot size calculator on MyFX book to calculate what your lot sizes should be, because I'm seeing like one lots on £200 accounts, and it's just a bit crazy. So just make sure you're please using the right lot sizes. I still do not understand how to use the tool before you take a trade. What one? Literally, what one? How long does it take a trade? How long does a trade go for to determine it's late? I don't understand what you mean. Can you rephrase? And then how do we know when we having a retracement and we getting out of it? Guys, like let me tell you something about the market. Yeah, you don't know. Like, there's no, oh yeah, the market's definitely going to do this and 100% it's going down. Like, there's no, you know, definite, oh, we know it's going to do this, we know it's going to do that. You've got to think of the market and your trades as scenarios. So you're creating a scenario of what is going to happen in the market. So you've got scenario one. Let's say, for example, right now, we're looking at this trend. We've got scenario one. It's going to bounce off this trend line in this area and it's going to go down, right? Where's the most logical place that it's going to go to? You zoom out and you look, okay, my support and resistance is here, where it's been before, and that's going to be close to the trend line at the bottom. So the most logical answer is for you to then put your target of where price will probably go, which is the next support and resistance area, right? So you've got to be logical about it. Where do we think it's gonna go next? You just be logical. Where's the next support and resistance area? Okay, so that's where you would put, like, for example, take profit or stop loss or that sort of thing. There's no how do we know it's definitely gonna retrace here or it's gonna then bounce up here? Like, you don't know what the market's gonna do. So the best thing to do, as soon as you're in profit, 10 pips, 20 pips, move your stop loss to break even. This will change your trading game. Move your stop loss into break even when you're 10 to 20 pips. If it hits it, so be it. You wait for the next trade, right? But if it doesn't hit it, you've then saved yourself losing money for no reason, right? So the best thing you can do is, if you're not sure if it's going to retrace or not, you move your stop loss into break even. That way, if you go to sleep and you wake up, your account is not going to say, oh, equity gone, margin gone. It's not going to say that. You would have just been stopped out and you would have lost £0. So trust me on this. You don't know what the market is going to do. There's no way to know, oh, it's definitely going to retrace here and, 61.8, 100% is going to do that. No such thing. You've just got to base it on, what the market has done before. It will do it again. It just copies itself. It mimics itself. So if it's done one thing before, it will most likely do it again. So base your trade and the stop loss and take profit and things like that all on that. Yeah, Mark doing bits. So would it be safe to say that if it bounces off 4 times, it makes it exactly? So if it, let's say for example, the trend is not going to continue forever, right? So if it's bounced off multiple times and you can see momentum slowing down, like the candlesticks are getting shorter, you can see that it's not got as much downward force anymore. You can assume that, okay, maybe it's going to start changing directions. That's when you're looking for things like higher highs, higher lows, things like that. That's when you're going to say, okay, maybe it's going to reverse. Things like harmonic scanner. If you can see that like momentum is slowing down and harmonic scanner is showing you like, okay, it's going to reverse now. It's got harmonic pattern. Everything's confirmed. You're not going to be looking for sales. You're going to be waiting. You're just going to be sitting on your hands. You're not going to be looking for buys because we know we don't buy on the breakout. We buy on the retest, right? So you're not going to be looking for buys. All you're going to be doing is waiting to see what's going to happen. If it does break, don't buy it. You wait for the retest, right? Don't be this person that sees a breakout, buys it, gets stopped out because it comes back down and then it shoots up. Don't be this person. Wait and be patient for the retest, right? When is it best to buy and also where to sell? I mean, it's best to buy in the uptrend and it's best to sell in the downtrend. That's really all I can say about that question. Like, there's no, like I've said, exact answer. It's based on your strategy. You said if a trade is too long, don't take it. So my question, how will the trade go for you to not take it? If it's okay, if the trade is already done, let's say for example, right here. Let's say for example, I missed this entry and it's come all the way down here, right? That's what, 20, 30 pips, maybe 40. Okay, 30, 40 pips, right? So it's gone all the way down 40 pips and I thought, oh, I've missed it, right? I'm not going to then sell it because look what it does. It comes all the way back up. So what you're waiting for is a retracement. Like Mark said, you can use fib to find this, or you can just wait until the candlesticks are showing you or it's coming to a certain support and resistance area. Right here, it came back up to near the trend line and this support area. So that would have been where we could then get in for the sell, right? If you sell down here, you're then in 40 pips drawdown. So depending on your lot size, you've buoyed yourself. Just wait for that reversal, wait for the retest. And then you would have got in and you would have got here. You could obviously move your stop loss to break even and you would have been all the way down here in profit, right? So that's when it will be too late down here. So what are you doing? You're waiting for some sort of retracement and then you're going to get in. Let's see the other. Okay. Where do we even place our stop loss when it's going to break even? No, moving your stop loss to break even means you're moving your stop loss to the price you entered at, which means that you're going to lose 0 if it comes back and hits your stop loss. So when you move it to break even, you're basically stopping yourself losing any money. It's risk free because your stop loss is 0 basically. I don't know what I'm not even gonna try and look at that. I don't know what that is. But yeah, okay, cool. If no one has any other questions, then I will leave it here. And if anyone does have any questions, I'm sure your mentor has my number or you have my number. So give me a message. I hope this has helped as well. It is recorded, so I will send it through to you guys if you need it. But yeah, just remember your checklist is the most important thing. Like, make sure you have that checklist there when you're trading. And yeah, that's the main thing, guys. Checklist, right? So I'm gonna leave it here. I hope everyone has learned something from this. I hope it makes it easier to kind of transition from just learning to then putting it into practice. But if anyone like does need any help, then just give me a message. But yeah, enjoy your evening, guys, and I will see you later.